Welcome back, and in our top business story, new data released by global analysts Frost & Sullivan show that as a result of sustained growth across key economic sectors such as FMGC, retail, pharmaceuticals, oil and gas, automotive and logistics, the demand for high-quality materials, handling products and services across the Middle East is increasing. Estimates have shown that the UAE logistics market alone is expected to be worth $27 billion in 2015. That's up 15% from 2013, thanks to strong import and export figures, as well as an uptick in local manufacturing. This is reflected in the Gulf region's retail sector, with regional retail sales set to grow 7.3% annually to reach $284.5 billion by 2020. A similar story can be observed in the automotive market in the Middle East and North Africa, where the number of cars on the region's roads will reach 33.9 million, driving demand for auto parts and creating big opportunities for materials handling providers. Dubai and the UAE has positioned itself as one of the fastest growing and most efficient logistics hubs, with recently released statistics showing that Dubai's foreign trade soared 3% in the first quarter of the year, hitting 331 billion dirhams compared to the 323 billion in the same period of 2014. This growth has been attributed to the Emirates' heavy investment in its infrastructure, which has significantly enhanced its attractiveness to international businesses. Dubai is seeing a significant shift away from luxury hotels to mid-range properties, with almost 50% of new rooms to open this year having a 3-star or lower rating. The study published by Jones Lang LaSalle for the hotel show Dubai 2015 shows that 44% of the 3,600 new hotel rooms to enter the Dubai market in the final months of 2015 are mid-market. JLL previously reported that of a supply of almost 65,000 hotel rooms in Dubai in the first quarter of this year, 44% were 5-star rated. However, its new report showed that the near-saturated luxury market is set to be rivaled by a supply of lower-graded properties with more competitive room rates, 44% of which are forecast to be graded 3-star or less, and a total of 69% at 4-star or less. In the first quarter of 2015, only 29% of the current room supply is reported as 3-star or less. The report also said that Dubai's appetite for luxury is still present, as alongside the 5-star Palm Tower on the Palm Jumeirah, some of the most luxurious properties the city has seen will open in the coming years. Additionally, with almost 4,000 new rooms entering the market this year, the supply of rooms in Dubai is set to be close to 70,000 in 2016. Employees in the UAE and the rest of the region are more engaged with their jobs than most people in other markets, but they are not quite as happy with the human resources practices and people programs at the workplace. In a study conducted by Aon Hewitt among more than 9 million employees at over 1,000 organisations in 164 countries, nearly 7 out of 10, or 67% of employees in the Middle East and Africa, said that they are committed to their work. The number is the second highest in the world, with Latin America emerging as the region with the most engaged workers. According to the study's findings, workers who are engaged are those who are committed to and have a passion for their jobs. Thus, they are likely to be performing well and helping their organisations grow. Several studies have shown that companies with engaged employees are financially better off than those whose staff are emotionally disconnected, with statistics showing that a 5% increase in employee engagement is linked to a 3% rise in an organisation's revenue growth. Aon Hewitt's study showed that the top drivers for employee engagement in the region are career opportunities, employee value proposition, and recognition programs. However, compared to last year's study, employees' perceptions about HR practices plummeted by 24%, while satisfaction about salaries remained flat. Across the world, employee engagement levels remain flat at 61%, with workers' perceptions about their work experience dropping 28 percentage points in 2014. The money transfer industry in the UAE is set to thrive over the next few years, on the back of the country's strong economic outlook, supported by growing business activity, as according to industry experts. The treasurer at the Foreign Exchange and Remittance Group was quoted in a local report as saying that the volume of remittances from the UAE crossed 70 billion dirhams during the January-June 2015 period, and a similar upward trend is expected to continue in the second half of the year. It was added that expats working across the UAE remitted more than 35 billion dirhams in the first quarter, with India, the Philippines, Bangladesh, Pakistan and the Middle East emerging as the top 5 destinations. Another 35 billion dirhams was remitted in the second quarter, which according to industry experts indicates a strong upward trend in the money transfer business in the country.